Hey guys, welcome back to the channel. I hope you guys are well. I'm Camilo from Trending Waves, and what we're gonna do here today is we're going to analyze the charts of the SPY, the Qs, and we're gonna do this by using our preferred method of technical analysis, which is the Elliott wave theory. Okay. Now the question is the bear scenario at play at the moment? Okay, so you guys, the commodities are all skyrocketing. Tensions in Eastern Europe are not getting any better, and markets are looking very, very shaky. And we also have CPI this Thursday. We have the Fed next week, I believe. So it's a lot going on, and we can see that the German DAX, for instance, let me take a quick look here, is a chart that while we don't heavily track it, but it's a chart that is of concern, right? Because you can clearly see that we have broken a potential 1-2 scenario, right? If we take a look at the daily time frame, right, this would have been what we have in our indices, right, in the SPY and the Qs. This would have been 1, 2, 3, 4, and 5, which is what we're looking for in the SPY and the Qs. But unfortunately, this is now looking more like an ABC and then correction lower before we can resume the uptrend. Okay, so this chart has been technically broken, and this is one of the mixed signals that I have to determine whether or not the SPY or our indices or markets here in the US are going to head on lower. Now, I don't know if it's going to be like a German DAX or the FTSE, but it needless to say that it's very, very critical and scary out there. Okay, so there's going to be a little bit of back and forth here in this video, so guys, bear with me. So let's start with the SPY. Let's start with our bullish count, okay, which is our main count. If you guys are direct your attention here, which is looking for this scenario, right? This is the 1, 2, 3, and we're looking for the fourth wave. Okay, so it's asking if we have bottom here in the fourth wave. So in order for us to understand that further, we need to look at price action, recent price action from here to here. Okay, all of this, and what is that entailing? All right, so in order for us to do that, let's dive down to the 1 hour time frame, guys, and let's turn on our main count. Here we go. So the suggestion here, guys, is that the wave 3 in the primary degree completed on January, okay, the beginning of January actually, and then we got this AB, the initial leg lower on the A wave, then the B wave retracement, which we started generating a not a retracement, sorry, but a resistance trend line, okay, that again originated on the top of January, and then it was confirmed here in January the 12th. So you see a clear pattern, right? You see the pattern that every time we touch this trend line, for instance, here, we have a sell-off. We touched it here, we pull back, we touched it here, and we're pulling back. So it's a critical line that we have to try to break above, but it's having a hard time doing so. So for that case, look, we're looking at this as the C wave with W, ABC to the X, ABC down to the C. So we consider that the fact that maybe this is the completed wave 4, right? Why do I say that? Because if we go to the daily time frame, our daily time frame will suggest that the 38.2% retracement of the wave 4 in this case has come to support. All right, now it's the wave count, the structure, guys, is not looking like it. It's looking to more downside. Although if you are familiar with Elliott wave guidelines, right, we have till the wave 1. Okay, we have till the wave 1 for price action to just bounce around and then head on higher. If by any chance the SPY continues lower, breaches this zone, breaches this area, and closes below it, likely, I don't want to say this, guys, but likely it will look something like the DAX. Okay, and that's not good. That's not good at all. Okay, guys. So coming back to our SPY chart, going back down to the 1 hour time frame. Okay, so once we bottom here on February the 24th, which is now a critical area to hold support, we are looking at this as a potential impulsive structure, right? The 15-minute time frame will let us know what that is. So we have 1, 2, 3, 4, and 5 for the minor degree wave 1. Okay, again, 1, 2, 3, 4, and 5 for minor degree wave 1. And this is what I don't like. This is what is throwing me off. This entire ABC structure is way, 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 way too big and out of proportion for this wave 1. All right, and at the same time, it is deeper than what we anticipated to be. All right, because we would have liked to see an ABC correction to somewhere here, all right? But not this low, not this low, guys, not this low. However, this is still alive, right? This count is still alive. Just as long as we remain north of February 24th low, we should look at 416.61 as our level of support. And obviously anything below that will be very critical, will be discounting this chart. Now, turning off this and going back up to the daily time frame, what we have going for us here, guys, is that we are showing positive divergence. All right, if you guys are familiar, then you'll know that. Let me just push this over here for a second, because okay, here we go. So we made an extreme low on RSI back here on January the 24th with an extreme low in price action, correct? We then bounced, RSI pushes higher. We then make a new low on February the 24th, while RSI makes a new higher low. Okay, so that's positive divergence. You see relative strength making a higher low, while price action making a lower low. So that's positive. That's going for ourselves right now. Okay, that's a good thing. Now we bounce out the 24th, right? February the 24th, to make not a higher high. Neither did we on the RSI. Again, RSI is also holding this trend line resistance, which is not good. Now the critical thing here, guys, to keep on watch is the following. If we start making a new low, okay, in price action, we start breaking lower, and RSI starts breaching the zone and potentially the February 24th low, then it's already game on, game over rather, and we are heading lower. Now, let me turn on our alternate count wave 2, which suggests that we are still in the wave 4, but maybe we're going to see price action to the downside for a little bit further more. So for that, we're going to dive down to the 1 hour time frame, okay? And we're going to review price action out of the January 4th high. So this case is looking for ABC pullback rather than a WXY from our bullish count, right? Now, 1, 2, 3, 4, 5 to the A wave, the 5th wave truncated, which is good, okay? Or not good, but rather appropriate. Then we have an ABC pullback to the B. What we have here, guys, is that we have an expanding triangle. An expanding triangle, guys, is a 1, 2, 3, 4, and 5. You see here 3 waves, and now one of the characteristics or the guidelines for a wave, for an expanding triangle, is that the wave 5 will be equal to the wave 3 in length. Okay, so that's what these blue boxes are representing. Now, once we made a high here on the wave 4, again, I've been showing you guys this chart, right? Let me step back here, get you guys attention for a second. Here at Trending Waves, what we'd like to do is that we show multiple scenarios for what it is likely to happen. Okay, we're not calling the future. That's impossible. Anybody that says that or sells you a service telling you that this is what's going to happen, it's not appropriate, right? But what we do best is that we show to our members, we show the possibilities of certain scenarios, okay, and then we try to give them probabilities as to whether or not they'll play out. So in this case, it is probable that this scenario is going to play out, given the fact that on our preferred count, which is the bullish count, we are about to breach the low of the February 24th low. All right, so out of the wave 4, we have 1, 2, 3, 4. And now we start breaking lower, which you can see here, 414.80 is our new low post-market, right? Which you can clearly see here, or 414.78 at this point. Okay, that's below, or that's below this zone. Okay, that's the wave 3 low, or it's breached it. So it's not looking too good. It's not looking too good, guys. Now we head on lower, and then it's likely that we'll find support somewhere between the 409 and 404. Will the SPY break 400? Maybe. With this wave count, perhaps. All right. So look below. Look for downside support down towards anywhere between the range of 409 down towards the. Let me zoom out for a second. The $391 region. Again, we're still at play with between the 38.2 and the 50% retracement of this wave 4 pullback. Okay. All right, guys, so I hope this is clear because we are reaching critical points here in the markets, okay? Now, let me take you over to the Qs. The Qs in let's go up to the daily time frame, and let's just do a quick exercise, this is a little bit concerning to me, okay? The Qs, I'm using it as a gauge to let us know if we're going to see for the downside. So we've always been looking at this as a wave 1. Oops, that's a very bad wave 1. So wave 1, right? Wave 2, 3, and 4. Now we have a very, very, very small risk, very small zone of support for this wave 4, right? For this wave 1, 2, 3, and then 4 to be valid, to be a valid wave count, because we shouldn't be able to go below this area of the wave 1. Okay, that means that we have just roughly 5, almost 6% of downside before we start breaching the zone. If that's the case, guys, it's, I don't know, then it is likely. I mean, I'm not discounting any top. I'm not saying that this is perhaps the all-out bear market of the decade, and 2022 through 2030 is going to be, the next bear market. But likely that this is going to be, fortunately and unfortunately, will be the most bullish, but at the same time the most painful one short term. Why do I say that? Because if we're working backwards, actually, let's look at the SPY, right? At the SPY, here we go. This one will represent that. This is all count 3. So this is the scenario where if we keep on breaching those levels from the Qs, that it is likely that we are in an ABC pullback to the wave 2. Now, again, I say short term is a pain because we will definitely see a 350, 320-ish on the SPY. Okay, I'm not sure it'll be a very shallow wave 2. I mean, this is not looking like a 23.6% retracement. All right, it's looking more like a 38.2% retracement in the SPY. But given that everything that's happening in the markets, right, in the world, the geopolitical events. Now, it is likely that this is an ABC to the A, back to the B, and down to the C. Now, this whole thing may take a whole year. I don't know, a year, 2 years, because we may morph into a different type of pattern in the wave 2. This may be a complex correction. This may be going on with uncertainty throughout this whole year. But ultimately, once this plays out, guys, it's game on to the third. All right, and that's going to take us far, far beyond to the next generation. I don't know. I'm just speculating to to the future, right? But this is why we present different counts in different cases here. So if we start reaching those levels, then the A wave is at play, B wave up, and then C wave down towards this area here, the 350 to 323. Now back to the Qs, right? That will represent the same idea, right? That will represent the same idea, guys, in that we'll take an extension or retracement rather from the low to the high, and we'll go down towards the 289 to the 260 if we start breaching the zone. Okay. All right, guys. So let's take a look at the other wave count, which is our all count, to the 1 hour time frame. Same deal as in the SPY, guys. Same deal. All right, we're still looking for further price action to the downside. So 100% extension of the wave 3 to the wave 5 will take us down towards, let's take a look here. The extensions will let us know somewhere between 312 to 305. All right, 312 to 305 will be our zone of support, and then we can see price action, find support, and head on higher. I mean, again, guys, just like in the SPY, we are looking at positive divergence here. Okay, we're looking at positive divergence. Let me hide this for a second. So, on our daily time frame, we made an extreme low here on January the 25th. Okay, again, a low in price action on a low in RSI. Okay, then we bounced, and then we made another round trip lower here on February the 25th or 24th rather. But extremes on RSI kept a higher low, while price action made a lower low, lower high rather. Okay, guys, so that's what's driving me to believe that we are still in a correction, but of a primary wave 4, and that we're going to look for further upside once we complete this structure. Otherwise, if we start breaking, look, guys, if we start breaking below, right, and RSI heads on lower, then look, it's again we'll have to reevaluate at that time. But for now, we'll see what happens. Now, I want to show you guys why this is a pretty mixed. There's a lot of mixed signals going on, right? Let's take a quick look at the sectors, right? Not the MJ sectors, but rather the S&P sectors. And we'll take a look at the daily time frames without the wave structures, right? We're gonna compare them with the RSI to see what's gonna happen, because there are some instances where some of these industry groups are showing positive divergence, right? So for instance, the consumer staples, All right, we see that it's a bit confusing here. It's a bit complicated to count. All right, we have a low on February the 25th, excuse me, and then we're about to breach that low with the RSI. So that's one of the industry groups that is giving me a little bit of a hard time believing that we are going to see further price action to the upside. The XLV again also is letting us know that we have positive divergence, right? So a new extreme low here in January, a lower low in price action, but higher low in RSI. The XLU, same deal. Okay, utilities, guys, utilities in the breakout, just like in the energy sector. Okay, so that's good. Real estate, again, positive divergence. We have the XLI, right? The industrial group, it's also showing positive divergence. Financials is not. So we already have the XLP, consumer staples, financials, all in the gutter. Okay, we have materials here showing positive divergence. Energy, same thing, positive divergence. Okay, communications, positive divergence, and so on and so forth. XLY and XLE, all showing positive signs. Oh, by the way, here's 1, 2, 3 to the 5th. Okay, maybe looking for a potential wave 4 pullback and so on. So that one slipped in there, guys. Sorry about that. If you guys want more Elliott wave analysis for these sectors, just don't hesitate on jumping over to Trending Waves. The link to the Discord group is pinned down in the comment section. Let's take a quick look at the what are we gonna look at? Let's take a look at the SMH. SMH is also showing us positive divergence, guys. So 3, 4 ABC pullback, found support at the 786, 240, 79 in the wave 4, or wave CO4, while holding up a higher high in RSI. And you can see volume is spiking above average and above the previous days where it had higher volume in the bearish case and in the bullish case. Okay, guys, so again, you know, just we got to take it a day at a time. We can't be too certain and too quick on jumping the gun. Let the markets display their hand, show their true colors, and we'll take it a day and a wave at a time. As always, thank you so much for your time. I'll see you guys tomorrow. Take care. Bye.